In today's video, we'll be going over some of the stocks that I'll be buying for August of 2020. Last month was completely insane. I made the most amount of money I've ever made last month. So let's jump right into the portfolio so I can show you real quick. Here we go. This is my portfolio sitting at $88,000. This is the highest it's ever been. The annual dividend income for me right now is just under $3,000. And if we divide that by 12 months, that will be over $240 a month in dividend income. If you're brand new to the channel, my name is Bruce Wang. Typically, I only invest in dividend stocks and in real estate. Over the past month, I've been investing a lot into growth stocks, and I have to tell you, I'm liking it. They don't pay any dividends, but the gains are really impressive. If you guys are interested in anything in this video, links are going to be in the description. We got free stocks from Webull. We got free stocks from Robinhood if you guys don't have an account yet. And on top of that, you can see my entire portfolio as well. Links in the description down below. So let's jump into the first stock that I'll be buying for August of 2020. And I'll be doing that with my Robinhood portfolio. So Robinhood has been doing really well for me over the past few months. Today is one of the biggest gains I've ever received, a $800 gain day. Over the last weeks, I've been doing pretty well as well. 1,000 here, 1,000 there. And over the last 3 months, almost $3,000. So going down the line here, you can see now I've been experimenting with options trades as well. But what I want to show you is Starbucks. Starbucks is the stock that I've been focusing on over the last few weeks now. And for August, this is where I'll be going a lot harder. My plan is to own 100 shares of Starbucks. And currently I'm at 20 shares. Average cost is at $78.92. Smash the like button if you guys bought a coffee within the last month. Because Starbucks, they need a little bit of love because this pandemic has hit them pretty hard. So if we take a look at the 52-week high, Starbucks was closer to almost $100. 52 weeks low in March was at $50. And now we're like halfway in between there at $75. And I believe that this stock is worth more than that. It's worth at least $85. And that is also the Morningstar rating as well. Fair value is sitting at $86. And if we jump into Simply Safe Dividends as well, the valuation that Simply Safe Dividends is giving Starbucks right now, 67% safety score. And on top of that, it may be undervalued. The Starbucks dividend yield is 18% above its 5-year average at 2.18%. And if we look a little bit deeper, it is on that borderline to be reasonably valued. So currently, I still believe that it's undervalued. Over the past few weeks, I've been regularly investing into Starbucks. My biggest purchase was just on August 3rd, $137, July 27th, $76, July 20th, $50, and so forth and so on. I've never sold any Starbucks stock ever since I bought it, and I plan to keep it that way until I reach 100 shares. And once I reach 100 shares of that stock, I'll be doing what is known as covered calls. Links are going to be in the description if you guys don't know what that is. But basically, it is a way to generate extra income every single week through option premiums. So for the second stock that I'll be buying this month is going to be Square. And Square has been on an absolute tear since last month, since I came out with my July 2020, what stocks I'm buying then. And ever since last month, Square has been up 15%. And to be completely honest, I'm really hesitant to go all in on Square right now. I'm going to be just dollar cost averaging every single week into Square, buying a few $100s worth of the stock every single week. It's just sitting at all-time highs right now. Every single week is another all-time high. So whenever that happens, I'm not trying to go fall in for the FOMO. I made a video about that before. Basically, there's a lot of hype behind this stock right now. It might be because all these YouTubers are pushing this stock onto their audience. Who knows? So when it comes to my strategy for Square, I'm trying to stay really grounded here. On Wednesday, which is tomorrow, Square has their earning calls after closing. So this is going to be a really big earning call for me. I'm still really bullish on Square right now. I'm just not going to go all in when it's at an all-time high. Another strategy I'm using with Square is I'm selling cash covered puts for the premiums. And the premiums for Square right now, they're off the charts. For this contract, I made $330 in premiums. And if we take a look at all of the other options for Square for next week, you can see they're pretty ridiculous. These are all the sell calls. They're in the hundreds of dollars range. So what this tells me when I see this is that Square is going to be very volatile in the near future, and it's still very speculative, but On Wednesday, when the earning calls come out, a lot of questions are going to be answered, and we'll have a clearer vision for exactly what to do with Square for the rest of the month. For the third stock that I'll be buying in August of 2020, we have Apple. This is an all-time favorite. This is Robinhood traders' dream stock right now. Apple is sitting at $438. In the last week, it's been up 17%. Completely ridiculous. On August 24th, 2020, Apple will be doing a stock split, a 4-to-1 stock split. So for every one share that you own right now, you'll be receiving 3 more. One thing that I'm going to be trying to do is I'm going to be trying to get to 25 shares by that day. So when it comes to Apple and the stock split, I think it's going to be very similar to Square, where everything right now is at all-time high. When this does happen, when the split does happen, it's going to make it seem like Apple is a lot more affordable because it'll only be worth like $110 rather than $440 when the price right now. So I think a lot of Robinhood traders are going to be trying to get into it during that time. So in my opinion, I think it'll be better to buy it before than buy it after. And according to the Morningstar report here, fair value is sitting at $285 for Apple. So again, a lot of people are thinking Apple is very overvalued right now, especially since it's at an all-time high. So if we take a look at my history here, I've been buying pretty regularly over the past few weeks. Just whenever I have money left over, I'll just continue to buy. And I've been regularly buying Apple stock for the past few months now. So for the fourth stock that I'll be buying for August of 2020, here we have it, Lemonade, ticker symbol LMND. Today is up 7%, but over the past month now, it's been doing pretty bad. And when it comes to my average cost, I'm sitting at 3 shares, $72.66. So currently I'm down still $36 on this, but I believe that this stock has a lot of potential in the future. It's just currently at this market conditions, it's going to be very volatile. But let's jump into the Lemonade website to figure out what this is. Lemonade is in the finance sector, and it specializes in insurance. It's trying to revolutionize this really old industry where I'm pretty sure you have car insurance or homeowner insurance. Sometimes you need to file a claim, and your insurancer, they don't want to pay for it. That's how these insurance companies continue to make money. As long as they don't pay out any claims, that means they make more money at the end of the month. You know, I've had issues where I had car accidents, and I would call them. I would tell them like, "Oh, it's not my fault. I got rear-ended," and they would still blame me and make it seem like it was my fault that I caused the car accident. So, I don't want to rant on about how bad insurance companies are, but basically this is trying to take away the middleman. This company is trying to take away the middleman of the insurance company and replace it with an AI instead. So forget everything you know about insurance. Check out our prices. And basically, Lemonade is still a brand new company, in my opinion. They've only opened up for 5 years. In 2015 is when they first started their business. So my internet is down now, so I got to improvise. Lemonade, here we go. This is what it looks like on the App Store. 4.9 rating out of 34,000 ratings. Number 80 on the finance chart. So it's slowly moving up there. It's top 100. So currently, Lemonade only has 3 services for homeowners, renters, and pet health. I think a major industry that it should jump into is the auto insurance industry. That is where I have the most problems. My auto insurance is very expensive. I'm paying over $300 a month for my car insurance. That's just for me and my wife. So that's pretty expensive, right? But then I also have an expensive car. It's a weird flex, sorry. But if they can do auto insurance as well, I think that would also be a big influence on the stock price. So let's take a look at some of the finances for Lemonade right now. Current stock price is sitting at $61.14. And we jump into the financials. In March of 2020, revenue was $26.2 million. In December 2019, revenue was $21.25 million. Again, in September 2019, revenue was $21.25 million. And I think they just recently got into the stock market, so there's no information there in quarter 2 for 2019. Every single quarter so far, there's a lot of growth. This one's not going to be paying any dividends anytime soon. But when I'm looking into this company, it kind of reminds me of how Tesla disrupted the auto industry, how Cash App disrupted into the banking, into the finance world industry. So if Lemonade can do something very similar, then the upside is going to be through the roof. And in my opinion, it's going to take them a very long time to do this. So if you're going to be a long-term investor in Lemonade, then buying it very slowly is probably going to be more beneficial than just, trying to swing trade in and out of it. In my opinion, for my strategy, I'll just be buying a few shares every single week until I reach 100 shares, and that's where I'll be capping it off. After that, I'll reevaluate the strategy, see where the price is at, see how much the company has improved, and so forth and so on. And remember what I said earlier, that I keep a very small percentage of my entire portfolio for risky investments, and Lemonade is definitely going in there. So if you want to watch more videos from me, don't forget to check out these videos here. Don't forget to like, subscribe, hit the notification so you get to see updates from me every single week. And on top of that, follow me on Instagram where I post daily. Follow me on my second channel. I'll be posting a new video there. And I'll see you guys in the next video. Thanks for watching. Bye.